Welcome to Insights into the Industrial Revolution, Part 1, Finance. This is the first in a series of videos covering the companies and developments that drove the Industrial Revolution. I'm British, and for the most part I will focus on developments in Great Britain. In Part 1 of Insights into the Industrial Revolution, I look at the people and companies that financed the Industrial Revolution. Barings Bank. Barings Bank was founded in 1762 as the John and Francis Baring Company. The Baring family were wool traders with roots in Germany and England, but they diversified from wool into commercial banking. One of the keys to their success was their establishment of a network of partner banks across Europe, which allowed the easy flow of money for companies trading internationally. The company, like other finance houses of the time, also profited from financing the transatlantic slave trade. In 1774, the Barings Company expanded into North America, and in 1796 they helped facilitate the purchase of land that would become part of the state of Maine. In 1803, Francis Baring and Company became the official banking agent of the United States of America in Great Britain, and they were asked to help finance the Louisiana Purchase, in which the United States of America purchased 828,000 square miles of land from the Kingdom of France. Senior members of Barings were involved in the negotiations, as well as the funding of the purchase by the issue of US government bonds. In fact, the Barings Company ended up buying the bonds themselves at a discount. These were eventually paid off by the US government in 1823. The bank made a profit of approximately $14 million on the deal for that 20-year loan. That is easily over $400 million at today's prices. Ironically, Barings also helped the United States finance the War of 1812 against the United Kingdom, and it does not seem to have suffered any sort of sanction in Britain for this duplicity. Powerful people getting rich and able to circumvent national interests is a theme that persists across the centuries. Throughout the 19th century, Barings continued to expand its interests in North America. It financed railways across the continent and became an important financier for Argentinian and Uruguayan government bonds. A financial crash in Argentina in the 1890s threatened to destroy Barings. But just like the financial crash of 2008, the Bank of England arranged a bailout funded by other banks, and a new company, Baring Brothers and Company Limited, was formed, while the partners in the old bank lost their fortunes. Barings Brothers lost their preeminence in the world of finance, but this actually worked in their favour, as the company suffered less than other banks in the Great Depression of the 1920s and early 1930s. Barings Bank remained a well-known player in commercial banking and securities trading until 1995, when fraudulent trading by its head of trading on the Singapore Exchange, Nick Leeson, created losses amounting to nearly £900 million, and Barings Bank became insolvent. It was sold to the Dutch bank ING for £1. Nick Leeson was sentenced to 6 years in prison. That was the end of Barings as a bank, although the name lives on in the name of an asset management firm. Barclays Bank. Another British bank that profited from the slave trade was Barclays. The bank has its origins in the gold trade from 1690. In 1736, James Barclay became a partner in the business, and by the 1770s the firm was known as Barclay, Bevan and Company. By this time, David Barclay and his brother John were driving the growth of the business by establishing strong links in America and trading with the 13 colonies. They tried to urge restraint on the part of the British government in the measures it imposed on the colonies. And when they realised that the war for independence was inevitable, they reduced their dependence on trade with America and avoided the losses that many traders suffered. The company's transatlantic trade involved the company in profiting from slavery through its interests in cotton and linen. However, after the War of Independence, David and John Barclay began to campaign for the abolition of slavery. A trade debt had led to their ownership of a small farm in Jamaica, and in 1794 the brothers freed the 30 slaves that worked there and paid for their relocation to Philadelphia, where they were trained into manual trades. However, the commitment of the brothers to abolition did not affect the bank continuing to hold mortgages for plantations. The company continued as an important financier for the Industrial Revolution, and in 1896 12 English banks merged to form Barclays and Company. Further acquisitions occurred throughout the 20th century, and today the bank is one of the largest financial institutions in the world, with 100,000 employees and over £1.5 trillion in assets. Barclays has been involved in a number of financial scandals over the decades, including funding Robert Mugabe's oppressive government in Zimbabwe, in helping Iran avoid financial sanctions, and for manipulating interbank lending rates. There have been other scandals too, and the bank has recently been criticised for funding fossil fuel companies. More profiting from slavery. I'm using Barclays and Barings as examples of the role of banks in using the profits of the slave trade to fund the Industrial Revolution. But they are not the only ones. I think all the banking houses that existed in the early 19th century will have profited from slavery, either by funding shipowners or by holding mortgages in plantations. In particular, private banks in Liverpool and Manchester profited from slavery directly and through the cotton trade. Perhaps the largest of these banks was Arthur Hayward, Sons and Company, which had started as traders involved in the transshipment of slaves and developed into banking in 1773. Through many mergers and takeovers over the centuries, this became part of Lloyds Bank in 1969. Another financier, Thomas Leyland, entered the slave trade in 1776 by owning slave ships. He was personally responsible for at least 69 slave voyages and the transportation of over 22,000 slaves. In 1806, he set up his own bank to finance other slave traders. That bank eventually became part of Midland Bank, which is now part of HSBC. Thomas Leyland himself was rewarded for his devotion to the slave trade by being elected Lord Mayor of Liverpool 3 times. Perhaps it's unfair to point the finger, since these activities were considered normal by the standards of the time and were perfectly legal up until trading in slaves across the British Empire was outlawed in 1807. However, even then it was still legal to own slaves until 1833, when all slaves held within the remit of the British Empire were freed. Lloyds of London. Finally, we turn to the insurance market, Lloyds of London. From the late 1600s, wealthy individuals began to gather together in London to insure trading voyages. By 1691, a small club of marine insurers moved to Lombard Street in London. Although they were never a single company as such, the group worked together as a syndicate. By the mid-1700s, Lloyd's syndicates were insuring around 90% of long-distance trading voyages and held a monopoly of insurance for slave voyages. Up to 40% of marine insurance at this time related to the slave trade. Slaves were insured as cargo, with specific clauses relating to their death. The Zong Massacre. In 1781, the owners of the slave ship Zong sued Lloyds for insurance relating to 130 slaves they had thrown overboard after the ship ran low on drinking water. The resultant 1783 court case held that the murder of enslaved Africans was legal and that the insurers were required to pay for those that died. The decision was reversed on appeal due to new evidence that rain had fallen during the killing, making the murder unnecessary. However, even then, the appeal judge stated that the massacre would have been legally justified and the owner's insurance claim would have been valid if the water shortage had been genuine. This statement ignored an earlier ruling that the killing of innocents in the name of self-preservation was always unlawful. No case for murder was ever raised against the captain or the crew of the ship. In later years, the Zong massacre would become a powerful propaganda tool in the campaign for the abolition of slavery. Lloyd's of London diversified out of the slave trade in the early 19th century, and its members remain one of the most important insurance markets in the world. Let me end with one final thought. The profits of the slave trade were used to build magnificent country houses and majestic city centres. But some of these profits were also invested in mills and mines and ironworks and railways. The stupendous advances that were made in technology and in daily life that occurred between 1770 and 1900 are due in some part to the most horrendous treatment of other human beings. That is how the Industrial Revolution was financed. Thank you for watching. Goodbye.